Excellent. Well, good afternoon, everyone. Welcome and thank you for joining us today. My name is Vanessa Castillo Bell. I'm with Local First Arizona on the entrepreneur support team. So we're excited to have you here for today's workshop, Accounting Made Easy: Why Bookkeeping Isn't Scary as You May Think. This session is really designed to help demystify bookkeeping and make the financial side of business feel more approachable and manageable. Our presenter today, Michael Larkin, brings deep experience in accounting and small business support. So he'll take a moment to introduce himself and walk you through today's content. With that, I'll turn it over to Michael.
All right. Thanks so much, Vanessa. And hello, everybody, and thanks for joining us for this little workshop here. And yeah, I think the key here is making accounting and bookkeeping approachable because as small business owners, we all know it seems to be that scary thing that nobody really wants to tackle, but it's not as scary as you think. And we're going to go through some things that you guys can do starting today to really sort of start to tame that beast. So I want to just give you all a reminder that today's course is being recorded, so please keep your mic muted. I'll be keeping an eye on the chat here, and I want you guys to feel free to throw questions in the chat as they come up. I will take some breaks throughout the presentation to answer some of those questions, and I'll try to get to as many as I can, but please just shout them out in the chat whenever you think of them. Okay, so without further ado, my name is Michael Larkin. I'm an accountant and entrepreneur. I went to Clarkson University in upstate New York and majored in innovation and entrepreneurship, got my bachelor's degree. I also had minors in project management, economics, and human resource management. I worked in management for Amazon for 3 years at a warehouse right here in Phoenix. And I have a total of 14 years of entrepreneurship experience that actually overlaps quite a bit with my professional experience at Amazon as well. I'm a licensed real estate agent here in the state of Arizona. I have founded 3 companies: Effortless Mobile Auto Services, which is a car detailing company here in Phoenix; B&L Transport, a small transportation company, also here in Phoenix and surrounding states; and E&S Property Management, a company that manages rental properties for those who own them. I'm also a Local First member, and I am the Chief Operations Officer and co-owner of On the Money Accounting and Bookkeeping. That's who I'm here representing today. We are a firm that does bookkeeping and accounting for small businesses just like yours. So when the time comes, if it's something you're interested in doing, it's something we'd be happy to help you out with. All right. So to get started, why is bookkeeping so important? A lot of people think that when they are running their business, they know they're making money because they're looking at the bank account and the bank account has money in it, right? And that is a good sign, right? That's way better than the bank account not having money in it. However, with bookkeeping, that's going to be your only way to generate financial statements. The 2 key financial statements that you need to generate as a business owner on a regular basis are your profit and loss statement and your balance sheet.
It's around supply chain security. So if you use those tools.
Okay. Just a reminder, please keep your mics on mute. We're going to focus mostly on the profit and loss statement portion of accounting today and less about the balance sheet. They are both very important, but the profit and loss statement is going to be a better tool for operations with your business versus the balance sheet. So what is a profit and loss statement? It is a document that summarizes a company's revenues, costs, and expenses over a specific period of time. Most of you have probably seen some sort of a profit and loss statement before. And it basically just tells you how your business is doing. A balance sheet, on the other hand, provides a snapshot of a company's financial health at a specific point in time. So it details your assets, your liabilities, and your shareholders' equity. Okay. Like I said, we're going to focus mostly on the profit and loss statement today because both are important for other reasons, but the profit and loss statement is going to be the piece of it's going to be the statement that helps you the most with operating your company, and it's a great tool. So here's examples of a simple profit and loss and a simple balance sheet. Profit and loss statement is also commonly referred to as a P&L. What you can see here is you've got your gross revenue. Vanessa, are people able to see my mouse when I point?
Yes.
Okay, great. You've got your gross revenue here. So gross revenue is all of the money coming into the business. And that can be multiple channels, right? So for example, sales, that's going to be your most common revenue stream, but there could be other revenue streams like interest, dues and subscriptions and things of that nature. You add them all together and you get your gross revenue, your total gross revenue. You've also got your cost of goods sold. That's going to be the first expense item on your profit and loss statement. Usually those are what we refer to as direct costs. They are expenses that deal specifically with production. So for example, if you are selling a product, a great example of the costs of goods sold for those products would be your raw materials. These are an expense that are directly related to producing what you sell. And then you've got your operating expenses. These include everything else that's not directly related. These are your indirect costs and otherwise often known as overhead. Rent for the buildings that you use, postage to mail out your products, payroll for the people who work in your business, advertising expenses, etc. Keep in mind, this is a very rudimentary P&L. Usually the operating expenses, there's going to be a lot more than 4 categories. There can be hundreds of them sometimes. Some of them have subcategories. Regardless, they make up your total expenses added with your cost of goods sold. The only thing that isn't included in gross profit is your taxes. Once you subtract your taxes, you've got your net profit, and that's the money that you put in your pocket. Yeah. Like I said, make sure you yell out any questions in the chat if you have any as we move forward, and I will answer them as we get to points in the presentation. The balance sheet, once again, this one's gonna seem a little bit more complicated, but it's just basically a snapshot of your business at a specific point in time. So remember, the profit and loss statement is over a period, so you can see a profit and loss statement, for example, from January to December of 2025. You can see all of your income and all of your expenses throughout the year 2025. The balance sheet, typically, you're going to pick one point in time, and it's going to take a snapshot of your business. And that's everything you've got on hand, right? So your current assets, which include your cash, your accounts receivable, which is the money that people owe you, your inventory, and any prepaid rent. We'll get into that at some point. That's a little bit more complicated. You've got long-term assets like land that you might own, buildings that you might own, large pieces of furniture and equipment, expensive equipment like large computers, copiers, things of that nature, business vehicles, etc. They make up your total assets. Then you've got your liabilities, accounts payable. That's money that you owe someone that you may not have paid them yet because maybe you don't need to. Maybe the bill isn't due yet. Taxes payable, same thing, just taxes. Wages payable. Okay, so you've got people earning money from you as they work, but you only pay them, say, every 2 weeks. So it's important that we still keep in mind that we owe people that money before we end up spending it because we don't technically have it. We owe it to someone else. Interest payable. And these are great examples of current liabilities. Long-term liabilities are going to be like your long-term loans, right? Your car loans, the mortgage on your offices, etc. And then last, we've got owner's equity. And this is just, this is a bit more complicated. We're going to stay away from owner's equity for simplicity's sake in this presentation. Got a couple questions. Okay, great. Great question, Lily. Can we briefly go into cost of goods sold for a service-based business? Would materials used for completing repair jobs, for example, be considered COGS? Typically, a service-based business is not going to have cost of goods sold. So Sometimes if you want, so if you do complete repair jobs, sometimes you can include that in cost of goods sold. It's really more of a matter of preference, but typically the answer is no. Cost of goods sold is not gonna apply to service-based companies. Great question. And yes, anything that you spend in a business capacity, for the most part, with a very few exceptions, is going to be tax deductible. Would it be categorized as supplies expense?
Or something, and that this thing must.
A supplies expense. So I don't want to get too far into the weeds here, but just know you can categorize things how you want them to be, as long as they're recorded. Okay. You're going to create your own categories, and they can be whatever you want them to be. So if you want to categorize them as supplies, you can categorize them as supplies. You can call that account materials. Remember, we're just tracking things here, and as long as it makes sense, then you're kind of free to call it what you want. I hope that kind of answers the question there. The idea is to not overcomplicate the accounting. Remember, accounting made simple, right? Okay, moving on. All right, so what's so great about these financial statements? So the profit and loss and the balance sheet. Why do we need them? First of all, your tax preparer needs them to file your taxes, okay? This is one of the most commonly missed things by new entrepreneurs, is filing their taxes. Trust me, you don't want to do that, right? The IRS is not to be toyed with. And you might think, well, you can get away with not filing your taxes because I didn't file my taxes last year and everything was fine. It doesn't happen like that. What happens is you miss filing your taxes 6 or 7 years in a row, and then the IRS comes down on you like a ton of bricks, right? And when they do that, they're not going to just say, hey, don't forget to file your taxes this year. They're going to say, you forgot to file your taxes last year and the year before that, all the way back to 2016. And you not only owe us all of those taxes, but you owe us penalties for not filing them, and interest that accrued on that money, because we should have had it that entire time and we should have been able to use that money to make our own money. So they're going to charge you a lot more. On top of that, at this point, this is something that you're most likely not going to be able to fix yourself without, serious accounting knowledge. And you're going to have to pay an accountant to go back and clean up all of your books, maybe start your bookkeeping as it had started, and file 7 or 8 tax returns in a row. Guys, this is not the way we want to do things. The best way to start a business is to do it correctly from the beginning and keep it going moving forward, right? This is in big, bold, red letters. Neglecting and catching up is considerably more expensive and stressful than staying organized from the beginning. And I don't want to, we just covered how it can be expensive, but I don't want to gloss over how stressful it can be as well. You didn't file your taxes if you didn't file your taxes, and that's going to stay in the back of your head until you finally get caught up, when it's going to be a huge relief. Don't do that to yourself. Filing your taxes is not scary, and sometimes you even get money back. A lot of times as a business owner, you don't. You might even owe a little bit of money, but it's better than just having it hanging over your head. Okay, starting a business and owning a business is stressful enough without having to worry about the IRS and the Arizona Department of Revenue. Okay, so what else about these financial statements? Who else needs them? Well, your bank needs them if you want to get financing for a loan. Okay. Loans aren't just to get you out of trouble. Sometimes they can be a great tool to grow your business. If you have a ton of business and you simply can't keep up with it because you don't have enough people working for you, but you can't pay the amount of people that you need to grow the business to that level, you could get a loan and hire more people and pay them with that loan. And those people are then going to generate a lot more money for you. Maybe you need a large piece of equipment, and that's going to boost your business in a huge way, in a way that's going to allow you to pay back that loan very easily and put a lot more money in your pocket. But you don't have the money right now for that piece of equipment to buy it outright, right? This is why we all take out car loans, right? Maybe you can afford a truck payment pretty easily, but you probably can't afford a $70,000 truck in cash, right? So you need a loan. Your bank is going to ask you, if you go to them and ask them for a loan, they're going to ask you for a profit and loss statement. they want to know you're profitable. They want to know you're going to be able to pay back that loan. And another thing that they might ask you for is your last year's tax return, because technically you can fudge numbers on a profit and loss statement. We don't want to do that ever, but it's possible. So a lot of times they want to see a tax return. They want to see what you reported to the IRS. So just another reason why filing your taxes is really important. And that's a great point, Vanessa. Is that if you ever want to sell your business, a lot of us talk about exit strategies while we're starting our business. Like, you might not want to own this business for the rest of your life. Maybe the idea is to build this business for 5 years until it's something that's very valuable and sell it. You're not going to be able to sell it without solid accounting. Whoever's going to buy your business wants to see how it's done over the past few years, and they're going to look at your profit and loss statement and your balance sheet for that. And then last but not least, one of the things that doesn't get the attention it deserves is the fact that your profit and loss statement specifically is an excellent tool for knowing how your business is doing. Just looking at your bank account isn't good enough, and we're going to go into specifically why that is. Before we do, though, I want to talk about some accounting software options. So I know you've all heard of QuickBooks, right? We all know QuickBooks. I would say that's probably the standard for accounting softwares for just about every business level until you get into really large businesses. Now, you've also got software like Xero and Oracle NetSuite. These are extremely large, robust programs. They're very expensive, and they're really only used for very large companies. So you don't need to worry about those. But then you've got some smaller boutique firms like Zoho Books and Patriot Software that are really designed for the very small startup business owner. They make things a little bit easier than you might find with other software, but they're not without their quirks as well. There are a lot of reasons why you would choose one software over the other. And this is just for when you get to the point that you're ready to choose an accounting software. There are a lot of different things to consider. Most people are just going to go right to QuickBooks, but we'll talk about the things to consider. So when it comes to how to choose a piece of software, there's probably 5 things that are the most important to consider when you're choosing. The first one I like to look at is integrations. Your accounting software is going to integrate with a lot of other pieces of software that you use to operate your business, namely your point of sale system, right? So if you're selling products or services and you use Square to accept credit cards, it's going to make your life a lot easier if that Square point of sale system integrates with your accounting software. That way you don't have to manually enter all of your sales from your point of sale into your accounting software. Softwares like QuickBooks can integrate directly with softwares like Square and automatically imports, right? Price, right? Those large, robust programs like NetSuite, I mean, they cost thousands of dollars. QuickBooks costs, depending on the level that you need, $50 a month. So you can pay whatever you want for accounting software. It's important you don't pay for more than you need. Customer support, man, this one is big. And this is actually, in my opinion, where QuickBooks really lacks. QuickBooks customer support is abysmal, in my opinion. When you've got something going on with your software and you're pretty sure you're not making a mistake, you're trying to save a journal entry and it's just not saving, you need to be able to call and figure out why that's happening. You don't want to get behind in your bookkeeping just because your software is glitching out. You got to have good customer support. Features. Does it do what you need and only what you need, right? Once again, if you were to get NetSuite, you would have all sorts of features that you just simply don't need, but you're still paying for them, right? So the idea is to find a software that has what you need, but doesn't have what you don't. And then last but not least, popularity. Will your choice limit your professional bookkeeping options if you want to hire a bookkeeper? There's a lot of bookkeepers out there that aren't going to touch another software that isn't QuickBooks, right? So it's a big part of why people choose QuickBooks. It might not be the best software. It might not be the cheapest software, but it's the most widely recognized, and it's the one that most bookkeepers and accountants are willing to work Okay, take a minute to answer some questions. So if you have them, go ahead and shout them out. Lily had another one. Do you know the company you would recommend for good customer support? I've definitely had bad support from QuickBooks Online before, and considering switching because of the high monthly cost. Yeah, so one of the biggest complaints about QuickBooks lately is they raised prices something like 5 times last year in just 1 year, and that sucks, man. When they've got you and you've got all of your accounting on QuickBooks, and they decide they're going to keep jacking the price up on you, there's really not a whole lot you can do without migrating to a completely different software, and that's a big job. And typically, that's not one you want to take on yourself. Typically, you're going to pay someone a good amount of money to do that for you. So yeah, I feel you 100%. I've actually been looking for a couple of different options myself, just to recommend to our clients when they ask us if we have alternatives, because more and more they're asking. The two that I have experience with, and it's why I put them here on the presentation, Zoho Books. Their customer support is a little better than QuickBooks. It's not a ton better, but they're much cheaper and they don't continuously raise the price in my experience. It's also a simpler software to use, and it doesn't glitch out as much. And that's the problem, right? They might not have much better support, but I find you typically need it a lot less because their software is just better. Patriot Software, same thing. I mean, their customer service is great. You call them, in my experience, it's someone right here in the United States who speaks perfect English who answers on the third ring. So that would be another option I'd consider looking into. However, just keep in mind, Patriot Software is a smaller boutique software, and there are accountants out there that might just not even work with it. They might require you to be on QuickBooks. Should a solopreneur still sign up for accounting software? That's a great question. And the answer is maybe not. Maybe not yet. Okay. It's inevitable. If you're gonna be owning your business and growing it, you're gonna need accounting software eventually. But maybe you don't need it today. And that's what we're gonna talk about next. Getting started without accounting software. All right. So because something is better than nothing, right? A couple simple rules for staying organized without an accounting software. Okay. The first thing you should do if you own a small business and you just got started, please do not wait to open a business bank account. Do that immediately. And this is going to make it possible for you not to commingle your business and personal funds, right? You have to keep those completely separate. And that makes accounting much, much easier, right? If you can see what you're spending in your business and not what you're spending in your personal life as well, you can see it very clearly because you're only using your business bank account for business and you're only using your personal bank account for personal stuff. It makes the accounting 10 times easier because you don't have to sift through the two. Another great way to stay organized is to track all of your sales and expenses in Microsoft Excel. There's two ways to do this. You can enter them manually, or you can. A lot of banks, depending on who you bank with, will allow you to just download a file that is compatible with Excel, and you can just import it right there, and it's super easy. Last but not least, keep all your receipts. This is good practice just from a tax perspective. So if you ever, God forbid, you do get audited by the IRS, they're going to want to see receipts. But it also it helps you keep those funds organized to know what you bought at what vendor, right? You might know you went to Home Depot, but if you don't know what you bought at Home Depot and you've commingled your personal and business funds, you might not know if it's a business expense or a personal expense. And now you start to get into the weeds of calling a personal expense a business expense. And when you're writing that off, that's technically tax fraud, right? So we don't want to get into that. So keep all your receipts and track your sales and expenses in Microsoft Excel. Yeah, and that's right, Vanessa. So QuickBooks, another great feature that they have is they have the QuickBooks app, and you can upload your receipts right to QuickBooks there, and then you can just toss the receipt. Okay, so another big, bold red statement Do not commingle business and personal funds. Like I said, I mean that can result in low level tax fraud. But at very least, it's going to cause you extra work, right? You're going to have to go through and separate them out. Now, I know I probably just said that, and a bunch of your stomachs just dropped because you've been doing that, and that's okay. Don't worry. I'm going to teach you some simple ways to fix that. But yeah, guys, as a general rule, when you're buying business stuff, do not pull out your personal credit card. Pull out your business credit card. Pull out your business debit card. Don't have one? Go get one. Okay. Like I said, build an Excel spreadsheet of business expenses by reviewing your credit card statement. So if you did commingle your funds, that's okay. Get online to your credit card or bank statement for your personal side and go through it. Create an Excel file that by month to month and identify which expenses on your personal bank statement or your personal credit card statement were business expenses and write them down with a date, where you purchased it, and the amount in your Excel file so you can track those. That's really important because you can write those expenses off. So if you make, let's say you bring in $100, but you spend $80 on business expenses, you didn't make $100. You made $20, and that's what you'll pay taxes on. If you made $100 and you spent that $80 on your personal credit card and you didn't bring it over to your business books when you're filing your taxes, you're going to pay taxes on $100. You don't want to do that. You want to get those tax write-offs. That's what people are talking about when they say tax write-off, right? You have to write off those expenses. Otherwise, you're going to pay taxes on money that you didn't make, right? The money you made is the revenue minus the expenses. It's your profit. That's what you're supposed to pay taxes on. So you have to record those expenses. So it is really important that you do at some point go through your personal credit card statement, identify which expenses were spent on business items, and document them. You can provide that spreadsheet to your tax preparer. If you haven't done a ton of business and you're not operating a massive business, you can just provide that spreadsheet with all of those business expenses that you pulled off your personal credit card statement or your personal bank statement, and your tax preparer will be able to get those write-offs for you. If you're just spending on your personal credit card and your personal bank statement, you don't know what you're spending on your business. You know how much money is coming in, but you don't know how much money is going out. And you can't expect to know if your business is succeeding if you don't know how much you're spending, right? If you made $100, but you're spending $200 on your personal credit card on business expenses, you just don't know it, you're losing $100. That's not a good business, right? So you gotta be able to separate that out and look at the business expenses and revenue together and completely separate from your personal. Okay, so I want to teach you guys today how to build a rudimentary P&L just with Excel, so you don't have to have your accounting software just yet. And I'm going to show you how to do this. But basically, the process is to enter your expenses and income into Excel. You add up all of your sales or income with the sum equals function. You're going to add up all of your expenses with the sum equals function. Then you're going to subtract the sales, the expenses from the sales to get a good idea of if you're profitable. Now, guys, this isn't the end all be all, but it's a great way to get started. Like I said, something is better than nothing. And you can do this on a monthly basis to compare months and identify trends, right? So for example, if you're doing this, you should be able to build something that looks a lot like this. And I'm going to show you how to do this. In July, for example, like let's say this business started in July, they only made $150 in income their first month, and they spent $400 because they're just getting started. They made no profit. They actually took a $250 loss. However, maybe in month 2, they brought in a lot more income because they're starting to gain steam, still had the same amount of expenses, but they made a small profit of $76. Now, you can see how the business is growing, right? Your profit goes from 76 to 400 to 747. And then maybe you have a bad month in November and lose a little bit of money again. But overall, we brought it back in December, and overall, we made $1,700 across those 6 months, right? it can be very hard to tell if your business is doing well if you had 2 negative months and you're not seeing it on paper. And this is getting you a visual so you can actually see how your business is doing. Because I know when I've started businesses and I had maybe 2 rough months, but I had four pretty decent ones. A lot of times it still feels like oh man, I'm probably losing money. I feel like I didn't do very well. But when it turns out, when I put it on paper, well, I actually made $1,700. This is pretty good. I didn't need to stress myself out nearly as much as I thought I was, right? So, and that's why this is so important. All right, let's take a look at an example. So let's say you have a business bank account, right? Your point of sale system is connected to that business bank account, and you're only spending money with your business debit card for business expenses, right? You can download that right to Excel and make it super easy. But if not, either way, you can still enter all of your expenses and all of your income in an Excel spreadsheet to separate it out. And it should look something like this. You've got your date, you've got your vendor, and you've got your amount. Now you got tabs down here at the bottom, so you can keep them separate. So we're on the expenses tab right now. It's super easy to create a new tab. You just click this plus, and you can label it whatever you want. But I've got some sample expenses right here. So let's say we made 3 purchases, and these were the 3 purchases. So the first thing we want to know is, what did we spend in January so far? This is the sum equals function. It is literally sum equals. So, well, it's equals sum, right? So equals sum, parentheses, and then you can highlight all of the ones that you want to add up and hit enter. And that gives you your sum. So far in January, we spent $1,839, right? We can do the same thing with income. So say we made 3 sales. We want to track the date that we made them, the customer who paid us, and the amount. So we got sales from Jerry, Beth, and Morty this month, and $86, $65, and $89, right? Now we want to know the total, how much we made, right? So we're going to go equals sum. We're going to highlight all 3, and we're going to hit enter. Now we know we brought in $241. Spent $1,839. Probably not a very good month for us, but that's okay. Let's say it's the first month of business, and we're going to take a loss for the first month while we grow. Now, here's how we turn it into a P&L really easily. Right here, we want to, like, let's say it's I put January, but let's just say it's July, right? If we're doing the month for July, we're going to go ahead here. We're going to hit equals. We're going to come back here to expenses. And we're going to click the sum there, and we're going to hit enter. Too big. Okay, and it pops up right there. You don't have to re-enter anything. Equals is your best friend when it comes to Excel. We'll do the same thing with with expenses. Right, equals. Oops, I actually did this backwards. This was income, so we're going to go with equals. We're going to go to income. We're going to do total income right there. We're going to hit enter. Same thing with expenses. We're going to hit equals. We're going to go to expenses, total expenses, there. So now we can see that in July, we brought in $241 and we had $1,839 in expenses. We want to know what our profit was. In this case, it's going to be a loss. We're going to hit equals this, our income, minus our expenses. There you go. Now we know we had a loss of $1,598 in July. And you can do that as you move on until you get to a point where you've got that P&L that I just showed you on the slideshow. Okay, this is a great way to build that P&L and just see how your business is doing. We're going to get back into the slideshow. Does anybody have any questions before we do? I'll wait a couple seconds here. All right. Okay, What I just showed you is typically referred to as bank balance accounting. You're really just doing your accounting based on what's in the bank, right? And there are pros and cons to doing it this way. The pros include that it's free, right? I mean, granted, you got to pay for Excel if you got Microsoft Office, but you could use Google Sheets. By the way, Google Sheets is exactly like Excel. Everything that I just showed you in Excel will work in Google Sheets as well, including all of the equals and sum functions. So yeah, it's free. Yep. You can see all the money that's going in and out when you do this. You know exactly what you have, and there's no expertise required. Guys, what I just showed you was super simple, and this is being recorded and it's going to be available to you. Go back and look at it again. There's also a ton of awesome YouTube tutorials. You can learn anything you want with YouTube. I highly recommend you do. If you're ever curious about how to take this a few steps further and maybe you want to build yourself a balance sheet. I'm not teaching you that here today, but someone on YouTube will teach you for free. I promise. What are the cons to bank balance accounting? And make no mistake about it, there are cons to this, and this is not a permanent solution. Okay, this is just to get you by until while you grow your business to a point where it's time to get into some accounting software and maybe get a professional bookkeeper. So the cons: no visibility into what you're owed. Okay, so that example I just showed you, we took a loss, right? But that's not necessarily true. It really depends on how you're billing your clients, right? If you're invoicing people and you have invoicing terms, maybe they don't have to pay your invoice for 30 days, but you did the work, right? Maybe you had expenses that you incurred. So, for example, let's say, and this is I'm not being paid to be here today, but let's say Vanessa paid me to do this workshop here today, and at the end of it, I sent her an invoice. Well, I just incurred all of the costs of doing the workshop, but Vanessa has 30 days to pay me. That's money I've earned. I can pretty much count on having that money. And in fact, if you go to the bank for a loan, the bank will allow you to use that to get favorable terms for the loan. They say they will look at your accounts receivable, aka what people owe you, and they'll lend you money based on that. So it's good to know what you're owed. You might be doing a lot better than you think you're doing because you're looking at your bank and you're like, I have no money in the bank. Well, people owe you money though, and that money's going to come in. More importantly, you have no visibility doing it this way into what you owe, and that can be dangerous. So, say you purchase services from someone, but they haven't paid you yet. You purchased raw material, or you haven't paid them yet, rather. You purchased raw materials to create your products, and the people who you purchased them from invoiced you, and you haven't paid them yet. Okay, well now you owe money. So you might see you have $100 in the bank, but if you owe someone $50, you don't have $100. You have $50, and you can't go spend that $100 because you're gonna put yourself in the red. You can't see any of this with the Excel methods that I just showed you. These are what you would see these as accounts receivable and accounts payable on your balance sheet with accounting software. So those two things go into making your business look more or less profitable than it is. So it's really important to consider what people owe you and what you owe people. And like I said, it can trick you into spending money you don't actually have. So it's very important that if you are doing Excel-based bank balance accounting, that you are keeping in mind not only what people owe you, but what you owe people. Don't make that mistake. Don't spend money you don't have. All right. So we talked about some ways that you can do your own rudimentary bookkeeping for free. We talked about the different accounting softwares that you could choose from when you're ready to get on accounting software. Now let's talk about hiring a professional to do it for you. And I want there to be no mistake here. This should be something you aspire to do. No good business owner wants to spend their time doing their accounting. Not only should they not want to do it, they shouldn't do it, right? I know a lot of local first members are in culinary businesses because you guys have this great culinary program for startups. if you're really good at baking cakes, should you spend your money or your time baking cakes or doing bookkeeping? Probably baking cakes, right? That's where you make your money. If you can make $100 for every cake you bake, and you can bake 50 cakes in a month, that's going to make you a lot more money than the money that you'll pay a bookkeeper to do your bookkeeping, which could take time away from you baking cakes, right? You should do what you're good at, which is running your business. Now, of course, when you're first starting, you might not have not have it in the budget to hire a bookkeeper, and that's okay. That's why I'm teaching you these methods today. But you should have it in mind that you will hire a bookkeeper eventually, because not only does it save you time that you could be using doing what makes your business good money. Bookkeeping is complicated, and you'll find this out pretty quickly when you get your accounting software. It's not nearly as simple as the Excel examples I just showed you. Bookkeeping mistakes are easy to make, they're hard to catch, and they can be costly. Okay, if you're not accounting for things correctly, you're going to miss tax write-offs. You might overstate your income and pay more taxes than you should. Um, and that's just the beginning, right? If you're making mistakes, it can make you look like you're not making money. I mean, geez, I've seen businesses almost close their doors because they thought they weren't profitable because there was too many accounting errors, right? So it's important that it's done correctly. And so you should be, just like you're good at baking cakes, if that's what you do, accountants are good at accounting. I can't make a very good cake, but I'm pretty good at bookkeeping, right? Do what you're good at and let accountants do what they're good at. And I want to touch on one more point here about hiring a bookkeeper, and that is this. And I don't want to go too into this and turn this into a therapy session, but I see a lot of people who come to me and ask me to start keeping their books, and the reason why is because their wife is keeping their books or their brother's keeping their books, and that sounds like a great idea at first, but unless your spouse is a professional bookkeeper, they're going to be prone to making the same mistakes that you would have made. Granted, it's not taking away your time now, but they can still make mistakes, and that can strain your relationship. And it does a lot. I mean, I see it all the time. People coming to me saying, my wife was keeping the books, but she's about had it with that. I need to hire a bookkeeper, right? So just consider that before you decide to have a family member do the bookkeeping, because that's a really common solution here. And based on the experience that I've had, I don't think it's the greatest option. To hire a bookkeeper, let's talk about some factors that you should keep in mind. Not all bookkeepers are created equal. Okay. I see a question here from Aaron. How much should you budget for hiring a bookkeeper? That's a great question. The cost of a good bookkeeper, or the cost of a bookkeeper in general, can vary wildly. Some of them cost, $30 an hour. Some of them cost $100 a month. Some of them cost $500 a month. I mean, you can pay whatever you want for a bookkeeping service. Typically, it's going to be based on how big your business is and how much work it is, right? Keeping the books for Apple is a lot harder than keeping the books for your small business, right? It takes a lot more time, so it's going to be more costly. Usually, a good bookkeeper will go through your books, give you an estimate of what it's going to cost, and then give you a price. If you're a brand new business, it shouldn't be more than a couple $100 a month. I personally prefer a flat rate, and there's a good reason behind that, versus an hourly rate. A flat rate's important because it gives you predictable costs, right? You know what your bookkeeping is going to cost every month, and that's really important when you're working on a shoestring budget on a brand new business. I think I just lost my train of thought. I'm sure I'll get that back. Anyway, with hiring a bookkeeper, you should. So why they can't? Oh, yes. Well, that's why they can't run up the bill with extra hours. Yes. Thank you so much, Lily. You've been super communicative. Um, you don't want to feel like you're going to get a bill every time you ask a question, and that's a huge portion of a flat rate, right? You want to be able to, man, if you're not sure about something with your accounting, you want to be able to ask your accountant and not feel like they're going to send you a bill, right? And that's why I love flat rate billing. My firm does flat rate billing. We do some things on an hourly rate, but we try to get you on a flat rate as soon as we possibly can to keep your costs predictable. And so you feel free to ask questions without thinking you're going to get a bill, because not asking questions hurts everybody. It hurts your accountant and it hurts you. Everybody should want you to ask questions. So you shouldn't be scared to get a bill. Thanks, Lily. you're a lifesaver. Okay, so how to hire a bookkeeper. The best possible way you can do it is to use a referral from someone you trust. You know, nothing beats a referral. If you've got someone who has owned a small business for a while and they tell you, you got to talk to my buddy over at so and so accounting firm. He's great. I've been using him for years. Go talk to him. You know, don't do a Google search and start with someone random. Start with someone referred by someone you trust. Um, some things to keep in mind, you know, your bookkeeper does not need to be a CPA. A CPA is going to cost more than just a bookkeeper, right? Because they have more certifications. Hiring a bookkeeping firm with a CPA on staff is convenient for sure. That firm can usually do everything that you need them to do, from your bookkeeping to your payroll to also filing your taxes. But convenience usually has a cost. However, you might get that cost back when your taxes are filed because they appreciate that they have your bookkeeping business. You know, these are all just things to consider. On the other side of the coin, hiring a bookkeeper with no certifications can be cheap, but it can be a nightmare. Keep in mind, anyone can be a bookkeeper. Okay. And when I say, I use the term can be a bookkeeper loosely, because it's really, they can say they're a bookkeeper. If you don't know anything about accounting, tomorrow you can post an ad saying, I'm a professional bookkeeper, hire me. And if your rates are low enough, people will probably come, and that you have no business keeping their books, right? Be aware of price. Usually, I have yet to find this one disproven. It's a saying you have all heard before: you get what you pay for. A higher price tag is usually going to come with a higher level of service. That's not always the case to a T, but keep that in mind. I mean, if someone's charging a rate that seems too low to be true, it probably isn't true, right? Like, they're probably not going to do a good job. And there are a lot of bad bookkeepers out there. So choosing your bookkeeper wisely is super important. Choosing a bad bookkeeper will cost you a ton of money down the road when someone who knows what they're doing has to go back and fix everything that they did. Maybe they have to amend your tax returns because all of your bookkeeping was off for years and you already filed taxes. It's just not something you want to do. So choose wisely and start with a referral. Okay. I want you guys to throw any other questions that you have here in the chat. That pretty much does it for my presentation. I am a professional bookkeeper. I have a professional bookkeeping firm. We offer all of the accounting services you could need, from starting your business on paper. So we have a new entity creation service where we charge you a flat rate, and we will get you registered with the IRS, get your EIN, get you registered with the Arizona Corporations Commission, and do all of the paperwork for you to make sure you have all your I's dotted and T's crossed. We also do the bookkeeping for you for a flat rate, like I mentioned, if that's something you're interested in. We can do your payroll, your accounts receivable, accounts payable management, and we can provide budgeting and CFO guidance and tax filing. Anything you need, you can get it right with my firm as well. But like I said, I'm not the only one out there, and you got to know who you're picking, right? So get referrals, and I am always here for questions. My direct line is right there. You can call or text me at that number. You can also shoot me an email. emails are always the best if you have any questions. Guys, if you send me an email, I'm not going to send you a bill. Okay. Even if we're not working together, I love Local First. I love small businesses. This is something that I'm very passionate about doing. Please feel free to reach out if you have questions. Maybe it results in us doing some business together in the future, but it doesn't have to. Okay. So, yeah. And I'll let you know if the question goes into, hey, this is something we're actually going to eventually have to charge for. That's fine. I'll let you know ahead of the game. So don't think you're gonna get in billing trouble with me. Any final questions before we wrap it up here? We got about 8 minutes left in our allotted time.